morning, everyone. Welcome. First of all, I want to introduce Laurie Skinner, the new Deputy Minister of Finance, but been there for how long now?
Since June.
Since June. She's taken over from Terry Patton. Today is the story of two economies that are affecting our province, our own economy and the world economy. The global economy is not doing us any favors, but our own economy is very strong and is going to continue to be strong for a while. We have capital investment going on here through, the projects, Valley Project, the Hebron Project, the Lab West, even construction and housing here in the province. I left the building here, and there were workers going. I went to a doctor's appointment in that building. There were workers working on it. There's capital investment. It's up over last year 32%. That's the biggest growth in the country. It's our biggest growth ever. It's $9.7 billion, the most we've ever had. And it's driving employment. Employment is up. Employment has increased 1.9% over last year to a record high of 229,700. The year-to-date employment growth is the third highest amongst all provinces. Our unemployment rate is the lowest it's been in 37 years. And in addition to more people working, average weekly wages are the highest they've ever been in our province. They've increased by 5.8% so far this year. They're the second highest amongst all provinces. We're second to Alberta. And it's the highest they've ever been in our province. So you got more people working, they're being paid well, and what we get out of that is higher personal incomes. That's jumping. Personal income is jumping 6.5% this year after growing almost that much last year, and it's going to grow that much again next year. So we have more people making more money, and as a result of that, our personal income taxes are up without any increase in rates. Personal income taxes are up over $90 million. That income has resulted in strong business confidence, strong consumer confidence, and we're seeing that in the value of retail sales, and we're seeing that in housing starts. Housing starts are expected to total 3,880, which would be the highest level in over 35 years. It'll beat the record of 2 years ago. Retail sales are up 5.6% during the first 9 months compared to last year. Sales are up right across the board. New car sales, almost 27,000 new cars were sold this year. We think that new car sales will be the highest number ever recorded in the province of Newfoundland and Labrador. So that's our local economy. It's strong, it's very strong, and we think it's going to continue to stay that way. The world economy is another matter. What's going on in Europe, the recession in Europe, the fiscal uncertainty in the U.S., or the economic uncertainty in the U.S., which is causing businesses there to hoard cash and not invest. So Europe and the U.S. are not buying commodities. There's lower demand for commodities. They're also decreased their demand for exports from China and India. China is substantially down. India is even worse. So because of that, Asia are not buying commodities. There's a lower demand for commodities in the world market. That includes the price of oil, and that includes minerals. And we can't avoid that. We're impacted by that. And as a result of that, we have our offshore royalties are down $436 million lower than what we had anticipated. Mining taxes, mining royalties are down $113 million more than we had anticipated, or less than we had anticipated. And so that affects our royalties, of course, and in both oil and in minerals. And the companies in this province, who are the exporters, because the prices are lower, their incomes are lower. Therefore, the corporate taxes they pay are lower, and therefore corporate taxes are $47 million less than we had anticipated. So
what was that last number? Corporate is down what?
$47.1 million. So overall, I mean, we've had some decreases in our expenditures of about $20 million, but overall, our revenue is down about $487 million below what we anticipated at budget time. That's offset somewhat by our expenditures. Our expenditures are about $19.5 million less than we thought at budget time. The net effect of that is a drop in revenue of $467 million. So our total revenues will be $6.7 billion. Our net expenses, programming expenses, and debt expenses will be about $7.4 billion, and we now anticipate a deficit of $725.8 million. $725.8. At the start of the year, we were forecasting 258.4. There were two major factors at the time that led to that forecast. One was the fact we wouldn't get the Atlantic Accord payment of $536 million, and secondly, we knew that two of our three oil fields would be down while their FPSOs at White Rose and Terra Nova would be offline for maintenance. So we knew revenues would come down. The government in budget 2012 made efforts to reduce the impact through lowering the growth in our program spending so that it would be lower than the rate of inflation. You recall when we first came into office, there was an infrastructure deficit to be dealt with. There was a pent-up demand because the province's programs were not what was being offered in other provinces, and then we had to stimulate the economy. But now, in the last couple of years, we have reduced the rate of increase in spending, and this year to below the rate of inflation. The continued global economic uncertainty has played havoc with our commodity prices, and we're not immune, as I said earlier. So revenues will be down, as I said, by about $487 million. So say half a billion dollars, primarily due to lower oil and mineral revenues, and the deficit, as I said, is now projected to be $725.8 million. So the situation that we're seeing here in Newfoundland and Labrador is no different than other provinces that depend on commodities for a significant portion of their revenues. Provinces like Alberta, BC, Saskatchewan are all seeing lower revenues than they had forecast when they did their budgets. For example, Alberta had forecast an $886 million deficit. They now say that will be, because of lower resource revenues, that will now be between 2.5 and 3 billion. BC yesterday, they had projected a deficit of $968 million. They're now projecting a deficit because of lower revenue resources of $1.5 billion. And the Government of Canada similarly said the same thing. They're facing those challenges as well. They recently increased their deficit by $5 billion over budget. Minister Flaherty, when he did the federal fiscal update, he said that while Canada's economy is still growing, we're not immune to the economic uncertainty beyond our borders and the economic challenges that are faced by some of our largest trading partners. Global weakness beyond our control today can carry serious consequences for Canada. So the volatility that's inherent in commodity prices is not a factor that's under our control. The prices are set in the world economy. We are price takers. We can't control that. But in the face of dropping revenues, in the face of new fiscal challenges, we must respond. While we can't control it, we have to respond to it in a responsible manner. That response began in Budget 2012, when we announced a plan to manage the long-term fiscal situation of the province with an overall goal of lowering our net debt per capita to the all-Canadian average within 10 years. In other words, we said that we weren't going to do it all at once, that we would have a goal, we'd have a plan, and we would get there. We would deal with it in a measured way. We wouldn't do it all at once. We wouldn't slash and burn. In anticipation of lower revenues at budget time, we started to manage expenditures accordingly. We've reduced discretionary spending, and we focused on an attrition management. We recognize that about 24% of the core civil service will be retiring over the next 5 years, and some, of course, will be leaving government to go to the private sector. So we'll use those voluntary retirements and those voluntary resignations to, manage the size of our core civil service to ensure that it's sustainable. We're also reviewing all programs and services through what we refer to as a core mandate analysis. We're looking at innovative ways, and we're looking to offer services to our people, and we are looking for more efficient ways to offer those important services with the idea of finding some cost savings. But now, as a result of the continued global economic slowdown, the fiscal challenge has grown significantly, and the measures required to address the situation have grown as well. We've worked very hard over the last number of years to get our fiscal house in order, and we've had a string of surpluses that shows that we know how to live within our means. And we must ensure we don't jeopardize that progress in any way. Our approach of balancing investments in programs and in infrastructure with debt reduction has been validated by all three credit rating agencies in this country. And that's an approach that must continue. So on a go-forward basis, future expenditures have to be in line with our forecasted revenues. Our ultimate goal is to manage within a framework that creates fiscal stability over the long term. As you know, we're in the midst of collective bargaining with the province's public sector unions. When we had increases in revenues, that put us in a position that we could provide our employees with very generous wage increases. At a time when our revenues will drop, then obviously our fiscal ability will be constrained. And we must exercise fiscal constraint. All of us, this government, we have to live within our means like any business, like any organization, and like any family. Another concern that I have voiced from time to time is the growth in our pension and post-retirement liabilities. And we have to examine options that will deal with this in the immediate future. The objective here is to ensure that these pension plans are there for the people who need them when they retire. Ignoring the situation will not make the problem go away. Investment returns are not at the levels required to fund the promised benefits. People are retiring earlier, and they are retiring for longer periods of time. So the liability is higher, much higher, and that's different from a time when people retired at 65 and were only retired for a short period of time. On the other side, the investment returns are not what they were. The taxpayers of this province have had to make $4.4 billion in additional special payments since 1997. And this year, the government is contributing on behalf of taxpayers another $258 million in special payments. But in spite and notwithstanding all those expenditures, those additional extra expenditures, over and above the annual contribution that government and the employees have made to the pension fund and the returns that it's earned, it's not enough. It's not enough. And the plans continue to be significantly underfunded, and they are not sustainable at the present time. In addition, we had to make significant expenditures to bring our infrastructure and our program and services up to standards that residents of other provinces were taking for granted. In 2008, when the recession hit, we had to stimulate the economy. It was wise public policy. It was the right thing to do because that recession did hit us very hard. And as we posted the surpluses, we had the means to invest significantly in these vital areas. But now that revenues are going down and now that we have a deficit, it's time to pull back. We still have a strong revenue base. The economy is still strong and will continue to stay strong. But we have to align our expenditures and our expenses in accordance with the lesser revenue. Now, I want to stress that despite the fiscal challenges that we're currently seeing, the economy continues to be resilient. Many of our indicators, as I mentioned earlier, place us amongst the nation's leaders. As I said earlier, more people are working than ever before, and they're earning more than before, amongst the highest wages in the country. And if you think about that for a second, who would have thought that just even a few years ago, that Newfoundland and Labrador would have one of the strongest job markets in this country? Now, I want to finish by just talking briefly about Muskrat Falls to clear up some misconceptions that are out there. Muskrat Falls will not increase the province's debt by 1 cent. Revenues from the project in the form of dividends will be more than enough to cover any borrowing costs that the province might have to incur to make its equity investment. And the dividends will be more than enough to cover any borrowing costs, and then the monies left over can be used by future governments to invest in the priorities of the day. We estimate that over a span of 50 years, Muskrat Falls will provide the people of this province with $20 billion in additional revenue to the provincial treasury. That's about $450 million a year. It'll start in 2017 at around $15 million, and it will grow as the project is amortized and as the debt, the mortgage, comes down. It'll be about $15 million in 2017. It'll be over $900 million at the end of the 50-year period, an average of $450 a year, $50 million a year. So this is a prime example as how we can and how we must diversify our revenue base away from being totally dependent on non-renewable resource revenue. Because non-renewable resource revenue is so volatile. Sometimes it's high, sometimes it's low. It goes like this. So we want to diversify our economy and diversify the base. And Muskrat Falls is a very important step to do that. And hopefully the government will be able to do Gull Island, which will even accomplish that more. We talked about in the energy plan by using, revenues from our non-renewable resources to leverage investments in renewable, and Muskrat Falls is the first step along those lines. There's also been suggestions that we must constrain our expenses so that we have the means to finance our share of the project. And that is not true. It is not correct. We've been planning for Muskrat Falls for years now, and we have factored our equity stake into our budget projections. And as I said, that any debt that we have to take out to help finance our equity investment will be paid back in the form of dividends from Muskrat Falls. Critical investments will continue to be made in priority infrastructure and priority programs that our residents rely on. In Muskrat Falls, we're going to put in a net equity of about 1.6 to 1.8 billion. We've already put approximately 300 million into that, so we will invest another 1.3 billion to 1.5 billion, depending on the type of financing structure that we arrange. So we'll put in approximately 2 to 2.2 billion, and we'll get back 20 billion. It's a good investment. With interest rates at historic lows and the federal guarantee that will see the borrowing costs reduced by $1 billion for ratepayers in this province, there's never been a better time to undertake an initiative such as this. It's easy to forget how far we've come in just 9 years. If we take a second to reflect on how much stronger the province is today compared to 2003, I think that most of us would agree that the change has been remarkable. Our province has been revitalized, and the gains we have made must be protected. A long-term, healthy fiscal environment is a top priority of this government, and it's a priority that we'll not waver from.